morning. Good morning, everyone. Morning, Chris, Rich, Shadow. How are y'all doing? Morning, John. Everyone. Hope y'all had a good day yesterday, rest day. I know I did. Let's see if we have our opening range gap here. We have our close up here. Our open right here. And then we have 272.50 as our midpoint. There we go. Now I want to see what we do in this little breaker right here. So on the daily, all right, let's go break this down here real quick. Morning, Tyler. Morning, Chris. I already said Chris. You're tired. Okay. Morning, Trader Joe. All right. So the daily chart here, we're still bearish, right? So we came up. All this already explained. We did drop down and we left. We did have this volume imbalance. I mean, yeah, this is not volume imbalance, fair value gap. Make sure I mark that there. Yeah. All right, we do have this volume fair value gap. I don't know why I keep saying that. We do have this. So we reached up. So now I'm waiting to see. I'm expecting price to run this low. As long as it, stays bearish, of course. But I'm expecting that to happen at some point. We do have, but we had a volume balance. We traded down through there. So it's still bearish here on the daily. Let's see. Yeah, I'll expect price to close down below this candle today, but we'll see. We do have a volume imbalance right here, which price already reached up into. All right, so that's pretty much all I have on the daily there. 15-minute chart. We did have NFP this morning, which is this big candle here. So this is going to be, I'll mark it out on my 1 minute, but we'd have our data lows, data highs there. So we had this 15-minute fair value gap here. Pushed into it, dropped. Now, there's not really going to be any highs or lows, equal highs or lows at the moment because we had that big push down here. We did have this 7 a.m. right here where we reached down, created some relatively equal lows here, right? And then, of course, we pushed down through that, so that's no longer looking at, but we do have this fair value gap, and outside of that, we don't really have much. And actually, you know what? I'm going to do this so I can see them both better. I'm going to just mark both. So this would be a order block here on the 15-minute chart. And so now let me drop down to the 5-minute. Of course, I have my London high and lows marked. On the 5-minute, I'm looking, since we already took that 7 a.m. equal low, let's look at 8. After 8 a.m., we kind of created this. Well, that's, yeah. We kind of created this area of smoothness up here after 8 a.m. So I'm watching that. And then if we look after 9 a.m. here, we haven't taken that area of smoothness. And we haven't quite created like it's delivered well to the downside. So we haven't quite created a, any more sell side liquidity here. So I am expecting price could try to make a run up there, or because this big 15-minute fair value gap, that's just derived from news, right? So that could be traded right back up through. So we'll see. I'm watching that. I'm watching this area up here, and of course we do have that opening range gap. So how big is that opening range gap? 193 to 3. That's a pretty big opening range gap. So it may not trade through it, but we'll see. Then if I drop to the 1 minute, here's our 9 a.m. hour. If you look here, this low is slightly lower than this one. So we did not create relatively equal lows here after 9 a.m. or at 9 a.m. So at the moment, I mean, this breaker is kind of holding right here. And this is a breaker because you have this low, high, slightly lower low, and then it took this high. So that means this series of up candles right here is our bullish breaker, if that holds up. Chris, shout out twice. Yeah. So at the moment, I'm kind of monitoring this situation with this drop, but we do have some nice looking buy side liquidity up here. So I'm going to mark that out, and it may try to trade back up into that London range as well. So we'll see. For the moment, I'm just kind of waiting. Let's see here. We do have that last week's low. And by the way, so I've still been trying to, y'all know I've been trying to refine, fine tune my entries and all that good stuff. Oh, wait, let me mark this data low. I think I have a, no, I don't have a template for that. Today is the 10th. I'm going to lock that on for a little bit to see how price continues to respect that or not. Data high there. Okay. So yeah, we may see some. Okay, so this breaker is not really going to be good there. So here's also, as I was saying, I want to refine my entries, right? So this is the year I'm looking to do that. And last year, all of last year, I still say was a good learning phase. Get my fundamentals down, the foundation of the trading that I want to do. And I had, like I said, one entry. And sometimes because of that, I would miss moves, which, it's fine. But if you can add more entries, then why not? So these are the 4 PD arrays I'm trying to focus on here. Inversion of fair value gaps. Fair value gaps, of course. Order blocks. And lastly, breakers. These are the 4 I'm really trying to focus on. And what I've come to the conclusion of, I reviewed a lot of my trades last year. And with that, I found the best winning trades included not just one PD array on entry. It included more than one. So what I'm trying to focus on is I want at least 2 out of these 4 PD arrays to be present on an entry. Order blocks and inversions are going to give you the best risk reward. So if you have those, then you're going to have the lowest risk on your stop loss. Breaker blocks are going to be third, and fair value gaps are actually going to give you the lowest risk reward and make you use the highest stop loss possible from what I've found. So makes sense why a lot of my trades would either have I'm not too worried about the stop loss because I only take the trades with, within my proper risk management. But why some of my trades would take some heat? I'd get in 40, 50, 60 ticks sometimes against me. It's because it's reaching up for an inversion or an order block, typically. But what I really want is 2 out of these 4 to be present. And the more the merrier, right? Like if 3 are there or 4 are there, that's going to be a no-brainer setup. But if 2 are there out of 4, that's what I'm aiming for. And then a breaker block. So like there's pairs, right? So like if you have an inversion and an order block together, that's great. That's a higher chance of happening. A higher chance of happening also is a breaker block with a fair value gap. So those things, each of those 2 pairs happening is really good. And a breaker block is very simple. It's 4 swings. So if you're looking for a bearish breaker block, you're going to have a move up, a pullback. So basically your swing high, that's 0.1. Then you have a pullback. You can't go lower. You create a swing here. That's 0.2. Then you'll make a higher high. This is 0.3. And then you take this one. You make a lower low right there. That's your breaker pattern. Okay, so you have 1, 2, 3, and then taking this low is 4. Okay. And what the breaker block is going to be is the series of down candles. So if it's bearish, your breaker block is going to be bearish candles, short candles, right? So from 0.1 to 0.2, that's your entire breaker block. So basically look like this. This whole area is your breaker block. If that's 1 candle or 2 or 3 candles, that entire thing is your breaker block. So if price comes back up, you're looking for it to hit here or somewhere in here and then go down. So why I'm saying the fair value gap with breaker block is huge, because you'll want to see in this move that creates the last leg of the breaker, you'll want to see a fair value gap here. If you get that with this breaker pattern, it doesn't always happen where both are there. But if you have that with a fair value gap here, solid. And then vice versa for the other way around. In case y'all weren't too well versed on that. We do have 10 a.m. news as well. So let me put that up here so we don't forget. Almost forgot. Hey, Julian. Yeah, so this was at 8:30. I wasn't on either. But then we have 10 a.m. news. So really, I'm not too concerned about anything at the moment until, like, we have this low here. See how it's reacting on our data lows here? We could see a minor little sweep of this area. But I'm watching this up here, these highs. I'm not too concerned with this big 15-minute fair value gap that was created by the news. So here we have this low, right? We want to see if we make a high, and then if we make a lower low, and then a higher high, we may have a breaker somewhere in there. So there's nothing yet, but I'm training my eyes to be watching for this. These 4 PD arrays right here. But as you know, price has to draw to something. And then when it draws to something, if we have a series of these 4, and like I said, I really want 2 out of the 4. If we draw to an area and then we have 2 out of the 4, I'm looking to take that trade because I have reasons to go up here. I'm watching this area up here. As you can see, we created kind of this little area of smoothness here. So we may be looking to attack that area as well. And we'll see if price continues to push down here. It very well could engineer some sell side liquidity, where if it pushes down and doesn't take this low, because the highest probability equal highs and lows are the ones that create a very close, like for example, to the sell side, if it creates a low that's just above this low, that's a high probability it'll come back to it if it doesn't, like if it runs away from it. JJ, morning, sir. I hope y'all can hear me well. I got a new microphone. I figured I'd step my game up on the mic. I think y'all hear me fine, but all right. So here we go. Here's a potential breaker pattern in the making. So we have this low. We form this high. So we'll see where we make this low, and preferably I want to see it take this low. Like if we could take this low a little bit, and then as soon as we take this high, that's our breaker right there. Potential at the moment. And then this series of up candles will be our breaker. We have that one little down candle there, but that's fine. Appreciate it. Yep. So see, this is what I want to see. We taking this sell side. Now there's always a chance too. Always a chance that it just runs, right? Because we are bearish ultimately. So there's a chance that it doesn't come up, but I mean, at the market structure currently tells me that we should. I don't have any reason to believe that we're just going to keep running low. Like, I mean, now we could go ahead and run this sell side as well, but we'll see. And if that happens though, like if we just keep going down, because we do have more like down here on the higher time frames here. Let me go to the daily chart. It's just, unless we get one of those big moving days, like we have this area of sell side down here. We have this sell side area down here. We have some more down here. Like we have reasons to keep going down, but we know typically price doesn't just like run that far, but we know it can. Back here. So this area I want to see, do we spend a lot of time underneath this low or not? I want to see if this gets inverted. We have this push down as well. Or this fair value gap. So I want to see if this gets inverted or not. I would really like to see it get immediately inverted. I don't need it right now, but I want to see it spend as little time as possible underneath this low. Excuse me. All right, 9:51 now. But again, we have 10 a.m. news. See right here what happens. If we invert this, now, of course, we still have this fair value gap, which means there's probably a 2-minute. Yeah, so there's a 2-minute fair value gap there. But as you can see, this would be we have a low, high, lower, low. If we take this high, we'd have a breaker. These two bars would be a breaker on the 2-minute as well. So if we can get a breaker in this area, an inversion, this would be a potential order block, and then a fair value gap. We have, unless price goes down, if we can displace up, we may have a potential for all 4 PD arrays. Will, that's the $1 million question. I'm still kind of testing that on what I want to do there, as far as where do I want to enter. For example, do I want to enter at the top of the breaker, the middle, whatever it is? But kind of what I'm coming to the conclusion of is, because I'm looking for 2 PD arrays, I'm gonna either likely, and it depends how much risk I need to take, because normally I don't want to risk more than about 30 points, roughly. 25 to 30 is about my max. If I can get a smaller stop, even better. So what I want to do is, let's say, for example, I have, what'd you say, a breaker and a fair value gap. So let's just say we have both. I know this is not formed yet, but let's just say we do have a breaker, the top of a breaker here to go long, and then we have a big inversion right here. Let's just hypothetically speak here, right? So like this series would be a breaker. Let's look at it here. This would be overlapping in a sense. So the middle of the breaker would be here. The inversion high would be here. So this is like kind of what I'm thinking. If it runs away, if it pulls away in this scenario, if something like that happened, instead of taking the entry at the top here, right at the top when it first hits it, I'm going to wait, because you have the top of this inversion. If you can see this here, the top of the inversion here, pretty close to overlapping the middle of the breaker. So I think for me, I'd be more so looking at this entry where the 2 PD arrays align a little bit. So that's what I'm thinking I'm gonna look for as far as entry goes, versus just getting up here. And yes, if there's a breaker up here, right, like that's a chance that it comes back, hits the top, and runs away. Right, there's a chance of that. But at the same time, like here to wherever my stop needs to be, if it's within that 30 points, I may consider taking it depending on what the price action is like. But more than likely, I'm going to wait until we get to where the 2 PD arrays overlap, and that'll be my entry point, because I really want to focus on having 2 PD arrays when I enter for a higher probability. Now, that's not the scenario going on right now, but I just wanted to kind of use that as an example. Trader Joe. So Trader Joe asked, does a order block need a fair value gap after it to be a valid order block? So I've seen people say it does. I may have even heard, well, no, I haven't heard ICT say it directly that an order block needs a fair value gap, but I do know an order block needs a change in the state of delivery. So what he describes is that it needs to reach into either some sell side, like for example, if it's a bullish order block, it needs to reach into some either sell side liquidity. It needs to reach into a fair value gap. It needs to reach into something, and then price close in the opposite direction, and that could be considered a valid order block. But if you have that displacement with a fair value gap after it, that just makes it a higher probability order block, because now you have 2 PD arrays, right? You'd have an order block and a fair value gap. But I have not seen ICT directly say that it needs a fair value gap. It just needs a change in that state of delivery. And then you have continuation order blocks too. It's like if price is going like here, it's not a great example, but basically if price is, I guess you could say, trending down, and you have an up close candle, price should not, it could treat that as an order block where it reaches back into it and continues, but it's not an order block. That's the part that's kind of like, I've heard him refer to that and call that an order block, but it kind of like contradicts a little bit the actual term of an order block being, change in state of delivery. But yeah, that's kind of what I've learned from him. And I always like to refer to ICT himself when I'm looking at things like that, because things can get misinterpreted by a lot of people. Yeah, well, no, I mean, it's, hey, and whatever makes you comfortable too. Like, it's never a bad thing to wait and make sure price reacts to certain PD arrays and actually works as it should, right? So like if it's in a fair value gap, you can always wait and make sure, like, instead of getting in right as it touches it, you can wait and make sure it actually acts as, a resistance area or support area. And then I've seen ICT talk about that, where as long as you get in before it takes out that next low, if it's going short, then you're fine. You'll just have maybe a higher stop loss. But, it's whatever makes you feel comfortable. Yeah, Trader Joe, the more PD arrays close to each other or overlapping each other, the higher probability you're going to have. That's for sure. It's just more confirmations. And, there's a lot of times you'll see some of these together, but not every time. So I was going back through my trades and literally, like, that's why I track and keep screenshots of every single one of my trades, because I can go back and refer to them. And then my spreadsheet, which, by the way, I know I said I was trying to get that out last night, but I've got it finally fixed to where I'm going to get it out today. But anyways, that's why I have it all in there with my links in my spreadsheet. Now I don't have to go back and searching, what days did I trade, not trade. I just go right in that spreadsheet, hit the link. Okay, that was a winner. Pull up that screenshot. Boom, there it is. And I can look like, oh, that one only had one fair value gap. And it won, but man, look at the struggle. Okay, this next one won. It had a fair value gap, but it also had, an order block. And it went, low resistance, things like that. Like, I was really going back, and what I saw, I'm telling you, it had the best trades had at least 2 PD arrays, and the ones that had a fair value gap, for example, fair value gap that I took, why did it reach up? Order block. This is an order block because it reached up into this fair value gap. Right here. Reached up into that fair value gap, dropped. So this is an order block. You can use, see, in this scenario, it used the wick. So if I measure out the wick here, came right to the middle point of the wick. That's why it overshot this fair value gap. So like in the past, if I would have taken this fair value gap right when it touched it, then I'm like, why did it reach back up? Well, there's an order block here. Okay, so it looks like we are going to reach for this last week low. And then what I'm watching here too is this could be, we could see price take this. See how this bar is such a big bar coming down? I want to see if this turns into an order block, a bullish order block or not. Again, price could just keep running down. But if this reaches under this low and then we trade above it, this very well could be just a big bullish order block. So I'm always constantly waiting and reading to see what it is. And the thing is, I'm not going to take a short because I don't really have much target here. Like we could go down to these lows and we could just keep reaching low, but for me, let's see, we have 930 here. This actually was the nice move. But then we have that that news just came out too. But we have this move here. We're reached up. Now it's dropping to take this low. So we may not, this is delivering pretty nicely. So we may not make our way back up. And if it just keeps pushing down, I probably won't. It's going to be a week of no trades for me, which is fine. Nice, Trader Joe. Yeah. All we can do is just keep, trying to figure more stuff out every day. Julian, you're going to sit it out today. See, that's a great mindset to think that, for me too. I'm looking at it right now. It's 10:02. I mean, I could still, but it has to be very obvious at this point. If it just keeps pushing down and see, here's another little accumulation, push down. For me, yeah, I don't really have much to go off of today. And that's, again, so for some people, my streams may get pretty boring this year. For other people that like to, I guess, analyze a lot and learn, and they're okay with okay, I may not get anything in this. It's not anything that sticks out to me, but you know what? This is, like Trader Joe just said, this is another wrinkle in the brain. Because guess what? Next time, if we end the day without a trade, that means we're not red, right? If I end without a trade, I am not red. Goal number one in trading is to survive, because over 90% fail. So to be the 10%, the first thing we have to learn to do is survive. And if we're not red on a day, we survived. So from there, then when we see another scenario like this, another day, I remember what happened. I didn't get anything. And that's fine, because we survived another day. Exactly, Will. Break even is better than the 90%. Definitely. So I want to see, since we're under last week's low now, you know what? Let me take a quick peek at the weekly chart. I haven't looked at that one. Okay. And all these PD arrays, everything that I'm talking about here, it's all fractal, meaning you can use them on the higher time frames to get the overall bias, right? So let's look at and that's what I did on the daily chart when I showed the daily chart. So let's look at this weekly chart here, right? We pushed up. We had a fair value gap right here. Let me highlight it. And actually, we had this volume imbalance right here. Well, I'm not going to show it right now. I'm not going to include that. But we have this weekly fair value gap, right? Pushed up, made the high. We traded through it to hit this volume imbalance, but we didn't close, right? We closed above, closed above, closed above, but we're slowly making our way down. So if we close low this week, it'll basically invert this fair value gap on the weekly, and we're taking these lows here, right? So that could be a shift in the weekly market structure, right? The market structure could be shifting on the weekly chart. If that happens, hey, we may be in for a transition to a bearish first quarter, because it always starts on the lower time frames up. So the daily, of course, will go bearish before the weekly. So if the weekly goes bearish here, then where are we headed to? Look at these lows. Look where I had that marked from the daily chart. What level is that? 242. Here, let's do this. Let's add the price level. 242.75. That'd be the next stop. Doesn't mean we'll do, some oscillating in between, but that'd be the next stop. So yeah, we very well could be, and we have this low right here too. So maybe I'm going to mark, in case we keep coming down, I'm going to mark this. Let's see. Let's go to red so it stands out. And let's do where? Oh, here we go. Let's do like a little dash. No, let's go dotted. And then I'm going to put weekly swing low. I'm going to lock that in. Because if we do keep making our way down, this is going to be a huge level. Yeah, Shadow, the higher time frame, and that's why I like to mark key levels on the higher time frames, because once you get to a key level on the higher time frames, I mean, those are going to be strong levels, right? So yeah, the weekly may be turning bearish. We'll see where we close today. And then, like I said, we go to that daily. Let's move this out of the way here. Daily's bearish. So from here, we're likely to trade down to that weekly swing low. We'll see if, like I said, we have this little fair value gap. So we'll see if at some point we trade, and then this would be an order block. So we'll see if at some point we trade to maybe the midpoint of this order. Oh, look at that. The midpoint of this order block overlaps with this fair value gap. So there's a high chance at some point we start pulling back up to that right there. Stuff's just beautiful. So yeah. Now let's look at this. Let's take this buy side liquidity. At this point, we're just playing now. Let's take this buy side liquidity and let's go to this low that we made here. We did reach up into equilibrium. Okay. But let's extend this out. We have the 0.5. This is what I say. Price typically will extend at least to the point. If it's just a running day like this, extend at least to the 0.5 to the 1 dev. So we have the 1 dev here. And then 1.5 dev is right here to the right below that weekly. So there's a good chance we could just push our way down there. We'll see. Let's go to the 5 minute. No. 15 minute. A little more clear on the 15 minute. So before we get there though, see, we're hitting the half dev here. We'd have to see if we have a little fair value gap right here on the 15 minute. This is how you could still trade this stuff, but it's not quite within my framework of what I like to do. But see, we have this one. We have this 15-minute gap. More than likely, I think we would trade past this one and make our way up to here. And the reason why is because this order block. 15-minute fair value gap. Then right here you have, let's go put this order block fib right here. So I think price could reach back to here, this 15-minute fair value gap, maybe hit that order block. Oh, you know what? I should leave that there. There we go. Yeah, I don't quite do it that way, Shadow, because he teaches that in the 2016 mentorship. And when you do that, there's a higher probability. Like if you do that, that's fine. Where you work your way from the high time frames down to the low front time frames and look for a fractal entry. The only thing about that is you do have to anticipate getting 1, 2, maybe 3 trades a week out of that because it's not going to be there every single day. The reason why I focus mainly on the 15-minute for my bias is to get a trade on the morning session just about every day. And that's what he goes over in the 2024 mentorship, because I'm only looking for one entry in the morning time frame. The 15-minute chart is going to give me a good bias for that. However, this week, if y'all remember, Monday, Tuesday, and Wednesday, there was good entries and they all would have worked. I just weren't taking those entries on this PD arrays yet. What did I do with my list? Did I lose my list of PD arrays? I guess so. I guess I deleted it. That's weird. I don't recall deleting it. So actually, let me put it, inversions happen typically, inversions and order blocks. Oops, not Orber. Can one of these two will happen first, and it could be flip-flopped. Then typically you'll have a breaker, and then a fair value gap. And then same thing, these two, breaker and fair value gap, can kind of be flip-flopped too. Breaker doesn't always come first. That's kind of the order that they'll come in. Hanging around. So here's that 15-minute one I marked. The lower 15-minute, and here's that higher 15-minute. But the thing is, I'm not really seeing a real reason for price to need to trade back up to these areas right now. Eventually, yes, but today, I mean, I don't see a reason price needs to. There's nothing when I zoom out, nothing that it's like gonna draw to and really stop at, unless we take this weekly swing low here. Like I just don't have any reason for it to stop. So because of that, like how can I be confident in a 1-minute market structure shift if there's nothing for it to draw down to, right? Like if it just stops in the middle of nowhere. So for me, that's low probability. Like it could happen. Like it could just stop and give some of these and have a market structure shift and all that and head back up. But to me, that's low probability because there's nothing it really drew to. Well, okay. So there are some new week opening gaps down there. So if we look here, we do have these series of new week opening gaps. So that might be a reason why price could come down here and then pull back up into those 15-minute fair value gaps, potentially. But that's not anything like that I really want to... Do I really want to risk my money on that? I don't know. And it's Friday, and I haven't taken a trade all week. So it's like something that's not as high probability. It's a Friday. I haven't taken a trade all week. Like, do I really want to risk that? Because then if I take a loss, right? Take a loss, and then it's like, that right there is just really not a feel-good moment. So yeah, sorry, I was just reading some stuff here. Let me see. See, and I really don't like this price action that much either. But ES, pretty much same thing. YM, all three are pretty correlated. Might have a little SMT going on here. So we have this. On NQ. This would be a order block right here on ES. Potentially. A bullish order block right here. Then with the SMT going on right here, we might be looking at a shift. Let's see. I would watch this wick here. Or this candle, last candle here, and see if price. Yeah, Will, I've never been big on SMTs because I don't know. Like you said, I've seen some people swear by them, and some people like I've never used them really, and I've never had an issue at all by not looking at them. But I don't know. I've just kind of watched a little bit just to see if I see it, but not really put too much weight behind it. Like I'm not gonna take a trade based off of it, but kind of like seeing NQ and ES have it, like ES made this lower low, right? So all I'm looking at is okay, maybe that's an end to this little run here, this little short. Maybe that's really all the only weight I'm putting on it. We did take this swing here. But again, it's got to be really obvious for me to take a trade today. See, like we don't have any, like there's a little bitty fair value gap right here that we inverted, but it's not something I'm going to risk money on. This is an order block. So like it very well could just be reaching back up into this area. Maybe even wick up into the 15-minute fair value gap and keep going. Yeah, well, that's kind of pretty much what I've gathered from it as well. Shadow, you said there's a 1 hour fair value gap? Oh, man. Way back. A 1 hour fair value gap? Oh, yeah, I don't look that far back. If I have to look that far back, I just go up a time frame. Like we have this right here that never got closed. It's 4 hour. Right there. No, it's fine. I just don't go back that far. If it's not on my screen, I'll just go up a time frame and there will be something there. But I don't. That's not really like, because within how I'm trading, like I'd be able to see everything I need to see on the 15-minute. And if I don't, then I'm probably not taking a trade that day. All right, so 1025. And one thing is that a lot of the reversals or setups and things like that can happen on Thursdays and Fridays, can happen later in the morning session as well. I've heard him say that many, many times, that it could, like most days, you'll get the 950 macro around 10 o'clock, somewhere in that area, up to 1020. But Thursdays and Fridays could actually come closer to 11. We'll see if what happens here. We're digging up into this area. Like I said, we could see it reach up into this order block here. That'd be an area like I wouldn't want to go long until I know. I'm not gonna take a trade anyways. This is outside of my framework, but this isn't anything very obvious. We're gonna have a clear shift. Like I'd be looking for it to take this area here to have a clear shift in structure. All right. Okay, y'all. I don't want to. It's already about to be 10:30. So again, I don't. It's outside of my framework. There's nothing really, because if it does take this area and have a cleared, obvious shift and it looks like it'll take this. It may come later in the morning. And I have my time frame that I trade. If it's outside of my time frame, then I can't take a trade because too many bad things can come from that for myself. So yeah, I'm gonna wrap up the stream here, and who knows, this could take its time. It's not something I'm really looking for. So yeah, I'm gonna go ahead and wrap up the stream. That video will be out later today. It definitely will, with that spreadsheet. How I use TradeZella. TradeZella is not a necessity for it, but you'll just see how I use it, and maybe you'll like the way I do that or not. But either way, that spreadsheet will be out, and I'll have that video out. And a lot of people keep asking me for that spreadsheet, so it'll be available. All right, y'all. If you're going to keep trading, as always, trade well, and I hope y'all have a great weekend. Thanks for being here, and I'll see y'all Monday. Have a good one.